about my coffee, peoples. Yo, yo! What's going on? How's the audio? How's the audio? Cool. Let's get to work, man. Tons of plays coming on in the market. We're having a little bit of a weak open. Watch that low from 3 p.m. If we take it out, you know what's about to go down, right? Flush fucking city. Flush city. Now, there's going to be two things that we've got to look for. We break below lows, we may get one more shred. One thing to remember is that you're really oversold right now, 13 stochastics. The second part is that the last 3 times we broke below the lower Bollinger Band, we had like a 3-4 day bounce. And so if we break these lows today and we kind of thrust under that, then maybe tomorrow we bounce or have a little bit of short covering. The other part that you got to remember, so there's scenarios. In bull markets, you don't have to look at the market, right? You just take stocks and you shred them. Down days, stocks go up. Flat days, stock go up. All the time you're finding stocks go up. Bear market trading, you got to read the market more. So there's going to be 2 things that we've got to watch for today. 3, I always give myself a bullish case scenario, a bearish case scenario, and a neutral scenario of what could happen in the potential market, and then the levels that you have to see for it to actually play out the way it needs to. So when we think about like kind of what's going down right now, if we break below this level, we might start to lean in short, meaning we look at our intraday patterns and we start to shred them to the downside. Now, the second case scenario that often happens when you have key levels in the market and you're oversold is the shake and bake, all right? The shake and bake involves you actually busting under the level, right? Everybody start to lean short and then you rip back above, and then the short squeeze starts because you're oversold, right? The shake and bake typically doesn't happen if the market is in neutral case scenario. So if this is 3 days ago, you would not really shake and bake, right? Because the market wasn't oversold. But now because the market is stretched, the odds of a shake and bake happening with the dip and rip stick is a lot higher. We've got to keep mind of that. Now, the other part that could happen is, you just hold above yesterday's lows and you start to kind of build higher. You may get a little bit of a pop into the markets. One thing to remember is that the market is, even if you get a nice pop into it, will take some longs, but they have to be really short term. When the market has been squeezing or going higher, even on the days it's up, it's been fading off into the close quite a bit, right? See, like this previous day, you got this nice shred to the upside, and then you fade it off in the close. Then you got a nice little shred to the upside, then you fade it off and close. And you get a nice little shred to the upside, and you fade off and close. That's been happening a lot. We've just got to be prepared for that. So if we hold above that low and we start to build and work our way higher, we can take some of the stocks that we like to trade, like Twilio and some of those things, and take them. But your hold times will be 1 hour max, maybe 2 hours if you really got like a nice trend going, but I wouldn't read too far into that. Watch list for today. We've got this TVIX still for the flat top breakout. Man, it just kind of keeps testing that level and then getting smoked back out. At some point, if the market gets nasty, this thing is going to break out of this, this range that it's been in, that's been going back a little time. You got two different angles that you've got to watch. One's trend line resistance, one's horizontal resistance. You break, hold, build over that to do that. Remember, once you break and hold, what do you look for, right? ORBs, quick pullback buys, flag patterns. One thing to remember with TVIX is it works really well off VWAP plays too. So be mindful of VWAP wherever you are. The further on TVIX that you get away from the VWAP, the higher the probability of the retracement. Anytime you're watching it, as you get like too stretched, just go on your, most of you guys aren't good at math, so I won't give any percentages since you all got third grade reading levels. If you're on your chart, you can fit 2 thumbs above the VWAP, then it's too stretched, right? It'll probably come back down, right? So go with the 2-thumb rule, and you should be good to go. All right, keep some of these inverse ETFs, these 3X ETFs on watch list. If the market starts to shred, you can go in with a TQQ. I think the one that's the most stretched is this TNA. This represents the small cap index. You're down 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row, minus this one kind of like mini green day. The one issue with TNA has been that the selling is really orderly. You know when you kind of just rip and ride on your Bollinger Band? What that's telling you is that the selling is orderly. To get a real bounce, right? To get like something that's got like some heat into it, what you need to do is stretch the rubber band, right? To make it so stretched that it's got to snap back, right? That means that you need to get that most of the candle actually outside that lower Bollinger Band. That indicates, right, that you're getting capitulation, that you're getting a bigger thrust, and that's when you can kind of stretch the rubber band, and then you can get a nice snapback for a couple days to do it. But remember this, we are in bear market trading tactics right now, which means that everything is guilty till proven innocent. You can't trust a hoe. Unless you are on MDMA, then you're a very trusting person, and then it's all different, right? That'll change you. 1, 2, 3, SQ, tap, tap, tap down, right? So this has got a good breakdown look to it. Already kind of breaking those lows pre-market, but if this thing shreds down, look for ORB or quick pullback buy. On the inverse ETF side, right, this SOX had a nice breakout. You tested this level 4 times. Up 12% yesterday, got good volume on it, 8%, 8 million shares. This one you can keep to the upside. NVIDIA is just a bear flag life right now. You're taking down these lows over here. I think this one's got a little bit more juice to it. Frankly, this Facebook is probably the top watch for today. These guys are fucking crooks, right? If this thing pops up, so you can see right now, it's already starting to come back green. If you start to see a squeeze on this thing, meaning it pops up $2, $3, watch these different levels, 137, and then kind of like this 135. If it gets jammed into 135, 137, let's start looking back at it for the rollover. Remember, it's not even at its previous low of 126. I think it can get down there. The one thing is, after yesterday's shred and the algos were really kicking on this thing because it's a thicker stock, you cannot short it low, like trying to hit it at breakdown. Got to short it into the pops and then kind of let that thing roll over. You short lows, use the hose, right? We know that. And I think this DWT is going to need one more day of consolidation, and then we'll get this thing going. A lot of people ask about MRIN. Yeah, I missed this. We wasn't even looking at it yesterday. This thing had some nice flag patterns and stuff like that. It's opening down just enough, I think, to probably have triggered the SSR on it. So that's actually good. When you get like a low float kind of stock and it opens weak, like if it opens down like 5%, it may just get dusted that day. But if you can kind of put that SSR on it, when the SSR is on it, all of a sudden the smallest amount of buying can really set it off, especially when you get a bunch of like, you know, there's pumpers. Small caps are funny. There's pumpers, but there's also reverse pumpers. The reverse pumpers are more devious than even the pumpers, right? Because they're just shorting it, trying to tell everybody it sucks, and they do suck, but we know that, you know. But so when you get the reverse pumpers coming in on the heat, then the SSR is on. That's when you can get a really nice squeeze to the downside. Hey Eddie, what's up, baby? You know, TRY, it did have some news out. This thing is in an epic downtrend. It might just run right into resistance here. I can't trust. I don't like stocks that are gapping up and pushing into resistance, right? When we have stocks that have like earnings out, like we need them to break out or like, you know, at least be in a zone where there's not that much congestion. That can really help. So if you were looking at TRY, you've got to just kind of think about the levels of like where it needs to go. So like, you know, the high from a couple days ago was 82, right? And it popped into the 82 and broke back under. So, Eddie, like, if it kind of can build and work its way back and stay over that kind of 82, right, then what you can do is then you can start looking at it and say, okay, it potentially could go to 95, right? The key is, like, when you don't, and in bear markets, by the way, no stocks look clean, right? There's no clean up gappers that are breaking out to all-time highs like we had 2 months ago. So you do have to kind of play with what you can get. So if you can break and hold over 82 and it starts to build, then you can say, all right, like, I think this thing might go back into, you know, and kind of fill into this kind of suction zone and trade around that. What you can't expect is it to have like days like this. This is like when you're above the 9 EMA, news and momentum begets more momentum because you have no level of supply of shares. When you have news and you are in downtrend, the supply of shares of bag holders, right, is just endless. And that makes it real tough. So we just got to be careful about it. Guys, it's Thursday, right? We've had a nice week so far, living that TVIX lifestyle. Let's be real sharp today. Try not to, you know, oversize and get carried away. I know for me personally, once I have like a few like green days in a row, I tend to oversize things and try to go for the home run. It fucks up the rest of my week. It's a natural thing, but you've got to always be real mindful that when the market is super volatile like this, that we personally, like we've got to go in and trade a little bit smaller and let the ranges play out, right? Let the momentum take over versus trying to oversize. That's always, you know, I'm always guilty of that too. It's like, man, we see all that action. We just want to take it down and shred and live a very nice, you know, honorable shredding lifestyle, but we can't do that forever, can we? So let's go do what we do. Let's have a little fun. And hot damn, I think we got the plays already. If I could walk on water. Alright, the shred zone is on. We want to hit that, watch that first pullback on TVIX too to the EMAs. Once it starts to fill that gap, and we'll start shredding this thing back down. Like right now, you can never chase TVIX up at highs, right? Once it starts to spike up like that, you got to leave it alone. Remember those lows on the QQQs too, right? If we hold below, if we hold above, we can't get aggressively short, right? We're thinking more long. So just remember to be mindful of where the market is before you take shorts. Never short into the hole, right? Never short above support. Let things play out, and let's go do some stuff.